My name is Kris Krohn, and this is a real estate investment channel. We're here to talk about finance, business, real estate, and I'm basically here to help you make the smartest financial choices of your life. And I'm gonna tell you that I'm constantly evaluating the worst mistakes that new investors make. Today on the Game of Real Estate, we're talking about one of the worst mistakes that brand new investors make. They assume that if you go into the cheapest real estate housing market, that you're probably going to get the best investments, they're the most accessible, they're the cheapest to get into. But today we're gonna evaluate if that's actually true. What's up, Kris Krohn here, and today we're talking about real estate investing and the different kind of markets that you can invest in. And we all know it, real estate has gone through the roof the last several years, and it means that a lot of people are getting creative to find the best way to get into the game. And many of them are making one of the worst mistakes that you can in real estate. They're going into the worst markets where houses are the cheapest, hoping that getting in the game into a cheap market is a smart move. And the truth is, it could be brilliant or disastrous. And today we're gonna explore the 3 cheapest housing markets to determine whether it makes sense to go there and invest or not. All right, check it out. We know the price of real estate during this last administration has gone through the roof, but have incomes also gone up? Well, we know that they haven't. In fact, if you take a look at the past 20 years, wages have not kept pace with home prices. The median household income between 2001 and 2021 went up only $6,005. Literally $64,779 up to $70,784. But the median home sales price has increased by more than $250,000 in that same time frame. And so I want you to think of it this way. It's like, okay, in the last 20 years, my income went up $6,000, but if a house has gone up $250,000, what is that $250,000 costing me? Well, $250,000 financed at a 6% interest rate, it's gonna cost you $1,500 a month. And so over the course of the year, that's $18,000. So literally, you've got $18,000 more that you're putting out every year to afford a house that's $250,000 higher, but your income has actually only gone up $6,000. We have a huge discrepancy, and that is what is leading a lot of people to say, well, maybe I gotta relocate. Maybe I gotta move to a cheap market. Maybe I gotta go to a place where real estate is a lot more affordable. And I'm gonna tell you right now that there are markets where that is the smartest move that you could make, but there are other markets where it's the worst. Said a different way, the typical mortgage payment has increased by 84% in the last 10 years, while income has only gone up by 31%. So according to affordability, it makes perfect sense then that the country's most affordable housing markets are seeing growth. But where should you as an investor actually be looking? Because some of these markets are a nightmare and some of them are really smart. Let me start with the #1 most affordable market in the country today. It's Toledo, Ohio. Right? Your median list price on a house is $205,000. Your 20% down payment comes in at $41,000, and your median household income is $46,000 a year. But Toledo has high crime rates, it has lower than average salaries, and it's a very poor business environment, meaning a lot of companies want to take their business into Ohio, period, but most certainly not Toledo. Now, I'm not just going to talk from reports today. I've actually owned real estate in Toledo myself. In fact, after the 2008 financial crisis, I had a chance to work with the government and buy 187 homes at a huge discount, like a 92% discount. These were homes in markets like Ohio, where basically the home was foreclosed on. All of these homes went back to the bank, and in this case, the bank was the government. And the government said, hey, we actually don't want to hold these homes. Let's just fire sell them. Let's discount them 92% and then release them into market. And here comes along successful investor Kris Krohn that has never bought out-of-state real estate before. And I got excited about these 187 homes. In fact, I flew a team of people out to go look at these homes and basically assess their condition. And you know what I discovered? I discovered that when you're buying a house for less than $10,000, even if you have to put $10,000 or $20,000 into it to fix it up, you should make money on it. I mean, at one point, this house was selling for $100,000. Shouldn't I be able to buy it at a crazy discount, fix it up, and then someday sell it? Well, I thought so. But when I bought these homes and I went into places like Toledo, Ohio, the most important thing that I learned about Ohio is that it has a psychodemographic that actually isn't quantified anywhere. and it has to do with the mindset of people. I bought this home in a neighborhood that after it was fixed up, I got it rented, and within the first 30 days, they stopped making their payments. Then they squatted and sat in the property as long as they could. And then when they were forced to leave, they not only took the appliances, they literally pulled out all of the copper out of the flooring, out of the walls, and they basically took whatever they could to sell off and make money. Now, this wasn't an isolated incident. This started happening again and again and again and over and over and over again. And that's when I learned that as an investor going going nationwide, there's markets that are awful that you do not want to invest in, and there are other markets that are really cheap. They're the best place that you can put your money. And I've done both, and I'm telling you right now that Toledo, Ohio, that is a hell no for me. Another market, super inexpensive, Scranton, Pennsylvania. You might know the city from The Office. The median list price is $239,000, but the median household income is even lower than Toledo, Ohio, coming in at just over $41,000. There are poor paying jobs here, crime is really high, and then of course you have very, very harsh winters. And so there's a lot of new investors that might think, well, Kris, Scranton's cheap. Like for under $50,000 out of my 401k or IRA, I've got a 20% down payment. I'm gonna own the house and I'm gonna be successful. And I'm just gonna tell you right now, you're not. There's a reason why in real estate we say location, 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 and the least expensive doesn't make it the smartest investment. Now, I've never owned real estate in Scranton like Toledo, Ohio, but I am gonna tell you that there's a reason why I don't own it there. It's not an up and coming location. It's not safe. It's not where people are moving to. It's cheap, it's poor paying jobs, and companies are not incentivized to move their headquarters there. Hence, so it's not like it's in the path of progress. And the third market that is ranked the cheapest according to median list price is Rochester, New York. $249,000 with a median household income of $48,000. Now, Rochester is actually not a bad place on the market list, but it does have some of the highest property taxes in the US with minimal public transportation and also has those very, very harsh winters. Again, not the path of progress. It's not where people are moving. What you need to do is you need to start asking yourself, where's the population migrating? Where's population booming? In those areas, if you can intersect then affordability and also where companies want to move, you're going to find different areas in the country that are now directly in line with the path of progress, which means people are moving there, they have higher standards, and all of a sudden, those are the markets that are going to increase in value. One of the best markets for affordability that I'm aware of is Memphis. And if you go specifically to Blue Oval City, that's where Ford literally just dropped an $11 billion all-electric vehicle plant, needing 11,000 new jobs and probably requiring thousands of more additional new jobs just in the local areas to support all of the people moving in all of those houses. Those houses, I'm buying for just under $200,000 in the next 5 years based on that market's rapid increase because of the supply and demand discrepancy. We're expecting that same house to be selling between $300,000 and $400,000. So cheap isn't always bad. You just have to be really, really smart. I'm going to tell you that I learned how to become really smart in the game of real estate because I've invested in the worst places, the best places, and I've done it with 7,000 different single family homes. And I'm here to tell you that there's a fastest way of building wealth in real estate, and it's not always the cheapest market. If you want to know how to take the least amount of money, time, effort, and risk and make the most money, I want you to click the link below and I want you to request a free game plan. I'm going to step into your shoes for free through a member of my team and tell you exactly what I would do if I were you to build a very successful multi-million-dollar real estate portfolio. Me and my team will also be there to answer every one of your questions and point you in the right direction. So if you're serious about becoming a millionaire or a multi-millionaire through the game of real estate, go below, request a free financial game plan, and let me show you how to get your start in real estate, whether you've got a ton of assets or like me, you started with nothing. Either way, there's a free multi-millionaire's perspective on how you get your start financially in the game of real estate. Click the link below, request your free game plan. Let's go. Now, on the other hand, if you want to know where Kris Krohn is investing, if you want to know where I'm buying up as much real estate as possible, click right here, watch this video. I'm going to show you where I'm having fun making the most money as possible, and you can join me.